What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing analysis on gold futures.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news and I will show you what type of catalysts you might use, what type of news you might use when you do the first analysis from scratch on futures. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you how you have to do the technical analysis from scratch. But before we dive deep into this video, please subscribe to my channel, hit notification bell and hit the like button. If you want to see more of these type of videos and I'm making the video on gold futures for the first time, please hit the like button and drop me a line that you want more of this type of content. So let's start with the price chart. As you can see, gold has, we are on, by the way, gold futures on COMEX, we are on daily time frame, and right here, as you can see, we have quite decent structure and we have a lot of information on it. If we zoom out to weekly time frame, let me show you that we have even more information and probably we can see the structure on the bigger scale. And definitely gold is quite a good commodity if you want to hedge your funds, and we have to know what type of catalysts might be the real catalysts for gold. And let me show you what should you do from the fundamental standpoint. So if you type in Google search bar gold futures, you will find a lot of news that was made recently, because gold is quite a popular commodity. And right here you can see that a lot of news, a lot of latest news shows that it slides for 1%, it gained a couple percent, and it is not the news on a bigger scale. We cannot rely on this news when we use the weekly or monthly or even daily time frames. That is why just try to find another news, and probably you can find it on Yahoo Finance. You can also try to find it gold right here in the search bar, and you can see that we have a bunch of news. And so 2 days ago we can find this article on Barron's. Gold is nearing an all-time high. Here is why. And let me show you this news in details. It was published on April the 7th, but it shows the bigger picture of this asset. So gold prices are hot at $2,023.70 at ounce, up 2.8% this past week. Gold has about 2% to rise to hit its record high of $2,069.40 set in 2020. The yellow metal has gained 11% over the past month and 24% from its recent November low to flirt with the record. Gold prices are typically driven by three factors, and this is information that we need right now. Gold is worth more in dollars when the greenback falls in value. Lower bond yields mean less competition for gold, which produces no income. And greater risk aversion makes gold more popular. Bond yields collapsed in March. The 2-year US Treasury note yield was at 3.8% on Tuesday, down from 5.1% at its early March peak. And bond yields abroad have held up better, waning on the dollar. So we have some catalysts, some potential catalysts. One of them is the bond yields and the value of dollar. And let me show you right here. If we add on this price chart the 10-year bonds, as you can see, from this point, from March 30th, 2018, we have an inverse correlation. Gold went higher at the same time when bond yields went lower. And right here, when we can see the inversal pattern on bonds, you can see that gold became more neutral and it was in flat consolidation phase. So definitely quite a good price action, and let me zoom out even more. And let's start with the technical analysis itself. And first of all, what should you do is that you have to zoom out in order to see the entire structure. And right here you can see several waves, and we all know that the structure should have, according to Elliott wave theory, should have 5 waves in it. And right here, I don't think that we completed all 5 waves. We have to see the completion of this wave. But in general, let me show you that this asset has quite good proportions. If I pull the Fibonacci extension tool from the bottom of the first wave to the top of the first wave and to the bottom of the retracement, as you can see, the third wave on a greater scale broke the 1.618 extension level, and it landed somewhere in between 2.618 and 1.618 range at almost $2,000 right here. And definitely then it had a retracement, and I have to say that 1.618 extension level is the most common ratio in between first wave and third wave in according to Elliott wave theory. Then it went lower from this bottom. Let's pull the Fibonacci retracement tool at this time from the bottom to the top of the wave, and we hit exactly 0.5 Fibonacci retracement level. Also very healthy retracement. And to project the price target on a greater scale, we have to pull the Fibonacci extension tool from the bottom of the third wave to the top of the third wave and to the bottom of the retracement. And as you can see, we hit exactly the range of 0.618, and it acts as a range of resistance. But the most common ratio in between third wave and fifth wave is 0.786, and it is the price point of $2,371. And probably we might have at least this price, we might hit at least this price in order to complete the fifth wave. So let me show you in details the movement, the latest movement, and let's switch to daily time frame right now, and let me show you this. So I think it should be better when we switch to weekly time frame. Yes, right here we also have several waves, and probably this might be the first wave with the flat right here. This is the second, third, A, B, C, this might be the fourth, and we have to hit somewhere higher in the future in order to complete the fifth wave on a smaller scale. And let me downgrade this tool. Okay, so, and we formed, according to this theory, we formed the third wave and we formed the fourth wave. Probably it is the case. And in this case, we have to pull the Fibonacci extension tool again from this bottom to this top and to the bottom of the retracement. And what do we have right here? We have almost 100% confluence our 0.786 on a smaller scale to the fifth wave, to complete the fifth wave on this scale, with the 0.786 to complete the fifth wave on a bigger scale. This means this confluence might work, and from our current range we have, let me show it to you, we have about not more than 20% in order to stay in line with the minimum requirements of completion the entire structure. This means about 20% of upside potential from current level, and in this case, if this asset completes this structure, we might have a major retracement. And from the range of about, let's say, $2,400, from this range, we might have a major retracement for the entire structure, and I mean from the very beginning of, I guess, 70s. In a bigger scale, and this retracement should be massive, and definitely it is not 100% guaranteed that from this point we might go lower, but the probability of this reaction becomes even higher when we hit higher targets. So for gold on a bigger scale, it is quite easy to make this type of breakdown. But if you like my video and if you want me to continue this type of videos on commodities, on futures, please hit the like button, subscribe to my channel, and drop me a line in the comment section. And if this video collects enough likes, I guess more than 100 likes, I will do another update on gold, and I will show you on a smaller scale what should we expect next. So, see you guys and girls next time. Bye.
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up on the attack.